without the truckers and the small business customers that we serve, we got no reason to be here. So, I mean, that's all about enabling and supporting, the American dream of independent owners and small business owners and small fleets. I mean, these people support families. They enable and support our economy, and we're here to help them.
Welcome to Stream, a trucktractortrailer.com production. My name is Zach Miller. I'm your host, and I'm honored to be joined today by Andrew Neer of Innovative Lease Services, or ILS for short. Andrew, welcome back to Stream. Good to see you again.
It's always a pleasure, man. Enjoy these conversations, and looking forward to the topics we have today. Let's jump in.
Yeah, let's do it. So we do have a couple of topics to cover today. They all do kind of flow together. Let's start with equipment finance deferred program.
Absolutely. So equipment finance, we've talked about a bit. It's a way of acquiring assets. In this particular case, we're talking about revenue generating assets. And oftentimes there is a ramp up between the asset acquisition. Sometimes actually there's a delay between the deposits that need to be paid to the supplier and the delivery of the equipment. And where that occurs, we have a specific program, our deferred payment program, where we can actually create a structure of a transaction that allows the business owner, the trucker, to acquire the assets that they need now and have payments deferred for 60, 90, 180 days. Letting them get the equipment and then start producing the revenue.
That's amazing. What are some of the qualifications for that? Like, how long do they have to be in business, their credit score, stuff like that?
I mean, generally speaking, it's got to be an above average credit. It's because there's risk there, right? We're laying out the capital and really deferring the payments in the initial portion of it. But typically, transaction sizes can come in really in our normal range of 5,000 to 5 million. We got terms from 24 months up to 72, depending upon the asset. And we're looking at credit scores of 600 plus on the business owner side. So, I mean, that bar is relatively low. Good business credit. We will run a business credit report. If there isn't a business credit report available, that's okay. Doesn't mean we can't do it. In fact, one of the benefits of our programs is we report to the commercial credit bureaus. So if you don't have that business credit report, our financing can help you build that business credit profile that you're looking for. So the bar is it's not onerous. It's meant to be pretty well encompassing.
Okay, pretty cool. So, but what about, so let's say person was in business, they had a rough go of it, maybe they had to file for bankruptcy or things were bad, but that was some time ago. Is that okay? Is there some sort of timeline where, you could look past the bankruptcy or those credit issues?
We can, yeah. And so it's really about what you've reestablished since. One of the lessons we learned in the Great Recession is, there's great people doing great business that came upon hard times. And one of the character things that we've found from that is you'll have business bankruptcies, you'll have personal bankruptcies where they specified certain lenders that they still paid. We can kind of look into that a little bit more deeply. But generally speaking, we want the bankruptcy, of course, to be released as much time as possible from that BK with good credit established history. It's a little bit of subjective there, but we really take a deep look at that.
And it's a really cool program, and it's a cool program in an interesting time in asset financing. Where especially talking about these trucks and trailers and these commercial transportation assets. It's an interesting market right now. So I guess with that interesting market, is it possible to use this program to fix some of your equipment, or maybe is it possible to use this program on maybe an older piece of equipment that you guys in other times may be a little bit less likely to finance?
It is. In today's world of asset scarcity, really creates a need for a program like this. So we can actually refinance assets that are owned free and clear, and those proceeds can be used for really anything. And it's one of our working capital topics I know we're going to be discussing. With the deferred payment program, where I think it's been really useful, where we've seen people that are trying to secure assets, but they have long lead times. So, that dealer wants a deposit at 50% or more, but that asset's not going to be available till 3 months from now. And so, I mean, that trucker's got the choice, right? So either you put your own capital out, or you utilize ours, and then what we do is we just do the payment deferral. So it kind of pushes it down the line a little bit. So when they get their assets and they're making money on it, they can start paying back then. Seems to make common sense.
It does make common sense, but then it's funny. I do have another common sense question. What if it's called equipment financing deferred, but what if I do have a couple bucks to put down as a down payment? Would I be able to put down as a down payment? Does that change the terms like it would a different sort of financing program? How does that work?
So what we typically do, the down payment can have a couple of different structures. The customer can pay the down payment directly to the vendor. Let's say it's 20%, and then we'll just finance the difference. We'll pay the vendor the difference on that. We've structured transactions where the deposit going to the vendor was paid by the customer, and then at the time of funding, we pay back the customer their deposit amount. We pay the vendor their portion of the transaction. And then the other way that we can do that as well, and this really buys down the monthly payment, is let's say it's a $100,000 transaction on a 60-month term. What we'll do, and the customer wants to put $20,000 down. So what we'll do is we'll make it a 61-month term. We'll make payment one a $20,000 payment, and then we'll make the other payments based upon what the differential is.
Oh my gosh, I feel like we just sort of wandered into talking about NFL contracts and salary cap structures over here. That's amazing. Last question on this, and then we'll move into working capital. If somebody wants to apply for this program, how would they go about doing it?
Yeah, so this program is super simple to apply for it. We want to make it as easy as possible. You can click the link through the TTT website on the financing page. You can call us, you can fax us, you can send us a smoke signal, whatever your preferred methodology, whatever is easiest for you. We can even do stuff over text. So we recognize that truckers especially are in different places all the time with different accesses to information technology. So you can call us, you can computer us, you can phone us, you can tablet us. And we're really meant to be as available as you need us to be.
Outstanding. So let's move in, because this is an issue that I think this comes up across so many different businesses, but especially those owner operators and those small micro fleets is the issue of working capital. We know it's been in the news a lot with the supply chain issues. The conversation of, is there a driver shortage? Is it an issue with how drivers get paid? Probably it's somewhere in the middle, as most things are. But as we know, the way drivers do get paid, the things that could happen over the course of their business, working capital is a huge issue for them. So let's talk about some of ILS's working capital programs and why these are better for trucking firms. Particularly, we know there's a lot of predatory players out there in that market.
There are, and it's an interesting market. The working capital is kind of a broad encompass of multiple different programs that are out there. Some of which we offer most of the mainstream ones, but it really comes into play when, like you said, your smaller or mid-sized fleet, capital is constrained, typically non-bankable or slightly bankable. And what we've seen recently, like in the last couple of weeks, and we're talking here in the end of January 2022, is the EIDL program, the SBA PPP program. Those have all ended. So the cheap and easy government cheese is gone, and then we've seen a return to like a need for third-party financing for these working capital products. And there's a need out there. It's an interesting thing. The working capital programs really are meant to enable and support growth. So there's an opportunity, whatever that opportunity might be, picking up, maybe buying out somebody else's line, maybe buying somebody else's business. And so working capital program can be used for those types of things. But there's a lot of other reasons as well.
No, that's really cool. I didn't know that. That's good to know. And especially would, I think the theme of trucking and logistics in 2022 is consolidation.
Yeah.
So we know there's a whole lot of consolidation going on. It's great to know that working capital could be used for that. Let's start with the asset-backed working capital. How does that program work? How is that built out?
So that one's pretty straight. So I always refer to this program as you're equipment rich but cash poor. And so you may own that asset because you paid cash for it at one point in time. I have a client that got a government grant, purchased the equipment with the government grant for its intended use, and then we did an asset-backed working capital to free up cash for the business to actually go do what they were looking to do. So if you own your assets, whether it's your rig, your trailer, other pieces of machinery, you may have forklifts, you may have some other assets. But what we do is we take a look at those assets, they're owned free and clear, and we essentially do a sale and lease back. So we buy those assets from you, and that's the working capital portion. We put that on a contract for 24, 60 months, whatever the term is. And then that payback period is over that period of time.
What's a typical size of the capital?
So it's interesting in trucking specifically in this vertical, we see a lot of smaller transactions in that $10,000 to $25,000 range, and it's driven by repairs. And so we transaction on my desk today that we just funded internally, $15,000, 10-year-old owner operator, had a big repair, and so we did a short-term working capital to get him the repairs he needs, get him back on the road.
Interesting. That makes a lot of sense. What about the credit scores you see?
So asset-backed is a little bit different because that's what we would call secured. So we have an underlying asset to back it up in case there's some sort of reason of default. So on those, the bar is a lot lower. There we're talking credit scores down to 550. We're going to be a lot more liberal in our credit scoring on those transactions. Typically, we're going to want to see 3 years time in business to make those happen. And the reality is on the asset-backed working capital, typically you have that that time in business established already.
Right.
Not a lot of straight out of the chute startups.
No, not in this industry, that's for sure.
Right.
But then what about, and I know, again, we talked about it earlier, the value of the assets right now is so high. I don't know that you run into this particular issue right now, but I'm sure it does happen down the line. What's the minimum asset value that you will back to then give capital?
So typically what we do is we go out and we say, okay, we'll go out to some of the sources to value that truck, and TTT is actually a fantastic source for that. Lots of assets on platform, so we can take that 53-foot dry van trailer and we can go out and compare it to 10 other assets that are on site. So TTT for us is a valuable resource there because of the inventory. But we'll typically take the value of the asset, 70% of that amount, and that becomes where we're comfortable lending up to. So it's a $10,000 asset, $7,000 is what we would put forth on that asset. Because
it's asset backed, do people need to put money down?
No, it's actually just the opposite. If there's any transaction fees, titling fees, or anything like that, we can net it out of the proceeds. So if it's $10,000 and there's a $350 state titling fee or something like that, we just net it out of the proceeds going to the customer.
Very cool. And then I guess sort of same situation as before, where if a person did run into financial problems, credit problems, there was a bankruptcy in their past, it's still you look at more what happened recently, and certainly literally the value of the asset that you're just taking control over. So people shouldn't have to worry about issues in their past too much.
Yeah, I mean, BKs are we tend to like to see still established credit post BK. What we never really want to do is get into a transaction and then we put the capital out and it immediately defaults, and that doesn't help anybody, right? It doesn't help our customer, by having to turn over the truck. It doesn't help us. So we do want to typically see some established credit after a BK.
Yeah.
One thing that we really want to make sure is if there's any tax liens, just want to make sure that they're okay as long as we have a payment plan in place, or they're released. So if there is a tax lien, got to make sure there's a plan in place. Oftentimes we see these tax liens and they've been released, but it hasn't been recorded. So again, it's kind of a cleanup, for our customer.
Yeah, I've definitely been seeing a lot of that, and certainly, with staffing shortages the last 2 years, it's been harder to clean up some of these issues that people think are resolved. I've seen that a lot too. Um, what about applying for it? How do people go about applying?
Yeah, same thing. With this, the only other piece that we need other than the basic application is obviously an asset description. If it's a titled asset, which should be in almost all these cases, just a front and back of the title, so we know that the asset's owned free and clear. And then we'll go on as lien holder on the title. We've got a fantastic team here that does all of our title work, so tend to try and keep that to a minimum. So application, again, through the TTT financing platform is a great place to click through to us on our website, on our mobile. We do have an application on our site, both in Spanish and in English. So whatever's easier for the customer. And realistically, pick up the phone, give us a ring. We're happy to take an application over the phone. We do actually quite a bit of that for all the fintech, the stuff that's out there to apply. We still do a significant amount of our transactions over the phone because it's easy, right? You can call us in while you're on the road.
It really is so much easier, and it's also just like you get it's just one stop. You don't have to parse out information. I mean, at least that's with me. I'm in the I'll just call customer service and speak to a person. It's fine.
You bring up such a great point there because it is a one stop. When you call in, what we were able to do is we're able to take your credit application over the phone. We're able to, and all of our team members are enabled and supported to do this. I call it the button. And so you call in, you give us the information, we click a button, it goes out and it pulls personal credit, commercial credit, all the stuff that we need to adjudicate credit while still on the phone. And we can actually give you a quote and pricing in real time. We can text that to you. If we're ready to move forward, we can DocuSign it. You can sign that thing on your phone the next time you pull over on the side of the road. And within 24 hours, you can have capital in your bank account.
Just small tangent here, but I actually got a better rate on my credit card a couple of months ago after calling customer service. I applied online, I saw what they were giving me, and I'm like, it's good, but I feel like there's an issue there. I called them, I actually got a bit, not an amazingly better deal, but a slightly better deal,
Yeah.
Every little bit helps.
It really does. Like more data points, the more we know, and we're really conversational. It's meant to be a relationship. I mean, we understand money's a commodity at the end of the day, but it's how we apply it, what the programs we get you into. We're always looking to do the best by our customers because we want to do your next 5, 10 transactions. I mean, it's really what we're here for.
Exactly. And so, let's transition to this. What would we call this? Regular working capital, credit-backed working capital? What's the official term?
So I call it unsecured working capital.
Unsecured working capital. I like that.
A couple of nuances within that, which probably doesn't really matter much to the customer. Yeah. So unsecured working capital is this is an interesting product. It's only really about 10, 15 years old, but it's based upon a lot of data analytics. And so, we can get away from needing an asset per se, as long as we can demonstrate that the business has cash flows sufficient to pay back the working capital loan. And I'd be a little bit more specific about that. What we analyze really is through bank statements. And there's some automated platforms. So you don't have to send us PDFs of your bank statements. We have some third parties that we can actually look at your bank statements with your okay. So you can kind of do this while on the road. But what we're looking at there is we're looking at cash flow. And so we're looking at how much do you have in the bank on average on a daily, a weekly, and a monthly basis. And we want to make sure that the cash flow of the business supports the ability to make those payments based upon how much we're lending. Because nobody wants to do a working capital loan that's going to drive somebody, out of business.
Right.
So we do a cash flow analysis. And what we're doing there is we're typically taking a weekly payment instead of a monthly payment. And the concept there is instead of taking one giant bite once a month, we're taking a little nibble once a week. And so it's less of a burden on the business, especially in trucking, where they're getting paid, as they haul, they're getting paid. As they haul, they're getting paid. And This can actually be an alternative to freight factoring if somebody's looking at that.
That's what I was thinking. And I mean that because the factoring terms are really high, as I recall. I haven't looked at one in a couple of years, but I know it's really high. This is pretty small what you take out a week, right? Just like a couple of points and that's it.
Yeah, it kind of comes down to like a half a point per month. So on a weekly basis, there's not a perfect 4 weeks in the year, but on a weekly basis, it's like, 0.125, something along that. So it is really meant to be, it's meant to be little nibbles throughout the course. And these terms go anywhere from 4 months to 18 months long. So it's really what we do is we present a number of options to the customer, and it's what they're comfortable with.
And I mean, and you talked about it with the asset base, but what they can use the capital for is the same sort of things, right? Same spending. It's all good.
It's actually whatever. So we actually wire or ACH the funds into your account within about 24 hours, and then how you use those funds. I mean, we want you to use them for business proceeds, obviously, right? No paying off gambling debts, but
right.
But no, I'll give you an example, and then sometimes there's what we call pay proceeds, where the customer may dictate they want us to send money. And I'll give you an example. We had a trucker down in Florida. He was broken down, and so we wound up wiring money to a towing company to get his truck into service, and then he got the balance of the funds. So once the repairs were done, he paid for them, and that was his use case in that particular scenario.
Wow, that's really cool. And then, but I'm glad you brought up that specific example, because I realized there was something I meant to ask you with the other stuff we talked about that we didn't, but this is a perfect opportunity for it. So what about the person's ability to pay earlier? What if, like you say, it really was for just this emergency situation, and you got the capital, resolved the situation, great, guy goes back out there, he's making, his good rates, and he's able to just pay it off quicker. Is that okay? Are there any penalties there?
There's never a penalty for it. What we do is the way that those particular products are set up is they're set up as a term. So if you borrowed whatever, let's just say 10,000, and the payback over a year is 11,500 or something along those lines, right? So if that early term payoff comes in, there'll be some discount from that remaining balance. Typically, it's 6%. We take the present value, just discount that by 6%. So it winds up being a real savings. We do typically have a minimum time period, like the first 90 days. We want to make sure, because we have sunken costs, obviously.
Right.
I will say this though, of our working capital customers, anecdotally, less than 1% payoff early. What happens is we wind up doing, on 70% of these customers, we wind up doing a second, and then a third, and then a fourth, because what they're using it for is midway through the term, we'll contact them and say, hey, you've paid this thing down 50%. Do you need anything else? And we increase those lines. So what it winds up being is a de facto line of credit, so that they have different projects, different needs. But to answer your question, single-use payoff, early payment discounts, of course, yeah.
Well, you answered my question though, because I was thinking about that. If they just keep rolling it over, that is really cool. Do typically the people who apply for some of these programs, do they not have relationships with your larger banks, or some do, some don't? It's kind of a mix. How does sort of the relationship you build with them differ from a relationship from a bank?
Yeah, so it's interesting. Banks don't take risk, and that's kind of the underlying premise of a banker's life, right? So the reality is, our small business customers, our truckers, I mean, they're not typically, a bank isn't typically going after their business, or you'll get somebody at the bank who's like an account manager level and say, oh yeah, come on in, we'll get you a line of credit, and then that's never gonna get approved, but they just check the box on their quota. So so bankable, not bankable, I mean, that's one of the considerations, but it's really about access to timely capital. So most of our working capital customers have a definitive need, it needs to be done yesterday, because some circumstance, drove them into this. Let me say that, some circumstance or opportunity. Now, we have a logistics company here in San Diego that we did a $350,000 working capital because he had an opportunity to pick up some routes. And for him, it just made a ton of sense. We have another customer that we did a large working capital so they can move out of their factoring facility. And it made sense for them.
Yeah.
They would manage the cash flow themselves rather than on the factoring portion of it. And that's not for everybody. Freight factoring definitely has a great place in the industry. But this product can be complementary to that. It can, you can use them both back and forth.
That's awesome. I love it. I love what these services are there for small businesses to take advantage of. And this is your business, and you help them stay on top of theirs. Really appreciate it. Any last thoughts or any last anything else on these?
Yeah, I just want to really hit home. In this case, the San Diego guy that I was talking about, we got $350,000 into his bank account in 72 hours.
Wow.
So from his application with us to funding his need, it was, that's not near real time, but it's pretty darn fast in the lending world for those type of dollar amounts. Smaller amounts, 24 to 48 hours. It's quick access to capital, quick access to reasonable capital. And really, it's meant to enable and support our customers, because without the truckers and the small business customers that we serve, we got no reason to be here. So, that's all about enabling and supporting, the American dream of independent owners and small business owners and small fleets. These people support families. They enable and support our economy, and we're here to help them.
Couldn't have said it better myself. If you like the content you see, please make sure to subscribe to Stream. Andrew, thank you so much. Appreciate your time. Appreciate all the work you and your team at ILS do. And just by the way, for your listeners, all the links are going to be in the description below. So so if you're interested in any of these programs, just follow the links. Go to the website, give them a call, and they'll get you your capital and get you on your way.